Good morning, everybody. Happy Friday. It's November 22nd, 5:27 a.m. Central Time. Grain markets are mixed this morning. Brian Split is here. Brian, your group, Ag Market, is doing a big meeting in Nashville. Why don't you tell the people about it?
Yeah, so this is our annual meeting, and it's going to be basically the weekend in between the division championships and the Super Bowl. So February 2nd and 3rd, and that'll be a Sunday and a Monday. We've got a really good lineup of speakers. I myself will be giving a presentation, doing something similar to what I do for Joe on our premium videos on Wednesdays. But we've got a group from John Stewart and Associates, which is our sister company. They work on the commercial side, so we'll get a commercial outlook on the market. A lot of good presentations from other people in the industry. Eric Snodgrass is going to do his weather presentation. We've got the head economist for the CME group coming out, Eric Norland. So it's going to be a really good time and a fun city as well, which you know all about, Joe.
If the people want to go, what should they do?
You should just go to our website, www.agmarket.net. There is a banner at the very top of the page. It's very easy to find. Just click on the banner. It'll bring you right to the page. It shows you everything about the conference.
Piece of cake. Check it out, guys. All right, let's start off with John Deere.
So John Deere stock surged on Thursday amid better than expected fourth quarter earnings. The company's stock rose 8% as fiscal fourth quarter earnings were substantially lower, but well above pre-report estimates. Adjusted earnings per share were $4.55, higher than the expected $3.87, but still much lower than last year's fourth quarter figure of $8.26. Quarterly revenue dropped 28% to $11.1 billion, beating the forecasted $9.2 billion, but falling from $15.4 billion last year. Net income for fiscal 2025 is expected to range between $5 and $5.5 billion, compared to $7.1 billion during fiscal 2024. Year to date, Deere's stock has gained 9%.
So the John Deere stock surged on this earnings report and has acted pretty well. Deere has done a lot of things to maintain margin. There were a bunch of layoffs in Iowa. They moved some stuff to Mexico. But when you go into the earnings report and you look at what is actually going on, it's a disaster. Net sales and revenues are down 28% versus the same quarter last year. Net sales down 33%. Net income down 47%. Diluted earnings per share down 45%. So while the stock is one thing and the people that run the company are very smart, they know how to maintain margin. I think, Brian, this is indicative of what's going on in the ag economy.
Right. And when you see the stock market as a whole and what the stock market is doing, right, we are up near record highs. We just had a huge boost to the stock market after the election results. And so I think the stock and what we're seeing in the earnings are kind of two different things, and there's a little bit of departure between the two. But yes, when you look at the revenue and the sales, the income, everything overall, that is indicative of what the ag economy is experiencing.
Markets are smart and traders are smart, and they knew that there was some not so good numbers coming. It's all a matter of what's priced in and what's not. Mm-hmm. And yeah, maybe some of the stuff was slightly better than what was expected by the trade. But I mean, I've said many times over the last several months, I think the farm economy is in a recession, and I think this is maybe one of the best indicators of that, because there's no economist out there that's going to officially say, yeah, we're in a recession. It's kind of a matter of opinion because it's such a small, tiny little market. But this just it just speaks to me what's going on. We look at the balance sheets and the budgets that we get from farmers, and it's bad. I mean, 2024 looks bad. The 2025 projections look terrible. I mean, there's no black ink to be found with regard to corn and soybean production. Soybeans especially, very, very bad. So kind of a sign of the times here, I think.
Soybean futures are at risk of posting fresh lows this morning. The most heavily traded January 25 contract hovers just a few cents above the life of contract lows that were posted in August. The headlines have been almost universally negative as of late. Weather in Brazil and Argentina has been favorable, while both the U.S. and the world are oversupplied. The likelihood of a U.S.-China trade war has encouraged additional negative sentiment.
All right, Brian, our daily chart, we've got this, as you would call it, a big base of support here at 973 or so. What does this look like to you?
That is a descending triangle. So you mentioned that base of support. There's the downtrend that comes across. And the NOV 25 chart actually has the very same type of a setup, except it's already taken out that base of support. So this is being led lower by the new crop at this point. Now it's just a matter of, does the old crop capitulate the same as the new crop did? And basically, when you take a look at a pattern like this, again, I don't make the rules on how this stuff works. I just try to let people know what the market is supposed to do after a pattern is violated or confirmed. And basically, you're just taking this measurement from about, let's call it 973.5 to a little bit above $11. So you're talking about $1.30 lower, measured lower from that 970 area. So you're talking about 840, 845. I think we looked at some other stuff that talked about 850 being a downside objective on the continuous chart. So bottom line, this is a long-term negative pattern, and this was more of a continuation pattern of the trend that we've been in for the last several months to years.
Some of us were hoping to enjoy our weekends, Brian, and now not so much.
You still can.
Let's look at the monthly. So I've got some trade war stuff in here. What does this look like to you? I mean, are we going back to trade war type levels?
If we have a trade war, then probably yes. So we've got kind of two things that are in front of us over the next, let's call it, 2 to 3 months. Number one is the new administration comes in roughly 2 months, and that will dictate whether or not we get into the trade war, how that is handled. And I think we're going to know rather quickly, because I get a sense that the administration is going to do a lot of things right out of the gate. But then we also have the size of the South American crop. And as you'd mentioned, right now, there just really isn't much in the way of weather to feel like we're losing production. So we lost some domestic production on the WASDE report earlier this month. That gave us a little bit of a spike. But I think the market is telling us that production loss versus what we are gaining on a global level because of the beneficial South American weather is overpowering that small domestic production loss. And so if you get the trade war and the South American crop and both of those converge at the same time and remain a bearish input, then that is likely where we are going.
During the U.S.-China trade war in 2018, 2019, China had African swine fever, and they were able to avoid U.S. soybeans. And a lot of people would make the argument that that was actually maybe a bigger reason for the decline in prices. I would make the argument right now that, okay, trade war is the sexy headline that's out there that everyone wants to talk about. I think just the general supply and demand situation is the much bigger issue.
Second biggest stocks to use ever, right?
Yeah. So the world soybean ending stocks to use ratio is going to be close to essentially record high, depending on how South America pencils out. So everybody wants to talk trade war, but trade war doesn't add or subtract bushels from the balance sheets. The fact of the matter is that even if there wasn't a trade war, I think the soybean market would still be in big trouble.
Yeah, and this is the stocks to use, which is really the most important way of looking at it, how much we have versus how much we're using and the ratio of the two. But I think just from a pure tonnage standpoint, as far as what our actual ending stocks are going to be on a world basis, we're going to have the highest tonnage of soybeans on the planet than we ever have.
Yeah, so I would not blame the trade war exclusively for or pending trade war. I wouldn't blame that exclusively for what's going on. As a matter of fact, I think the supply demand situation is the bigger deal, and the trade war is probably a pending trade war is probably second to that.
Yeah, a little bit of sentiment more than anything.
Yeah, definitely.
U.S. soybean export sales improved last week. Net soybean sales surpassed pre-report expectations at 68 million bushels. The print was up 20% versus the previous week, but down 7% from the prior 4-week average. China was the largest soybean buyer for the week. Net corn sales were reported at 59 million bushels. The print was up 14% from the previous week, but down 40% from the prior 4-week average. Mexico was the largest corn buyer. Net wheat sales were near the upper end of expectations at 20 million bushels. The print was up 45% from the previous week and up 29% from the prior 4-week average. South Korea was the largest wheat buyer for the week.
The haters, Brian, the haters, there's a lot of haters. They will all say that this corn export sales program, it's all smoke and mirrors because Mexico and Japan and other global buyers, they're front loading their purchase programs to get ahead of any geopolitical tensions, any sort of trade war type stuff. Is that the correct view?
It might be the correct view for both corn and soybeans, but the markets are trading very differently, right? So we've had tremendous exports of soybeans over the last several months. And again, we're not, at some of the best levels compared to some other years, but the amount of buying that we have seen from roughly mid-July to now has been rather spectacular. The pace has improved tremendously, yet look at where soybeans are on the chart. They're right near the lows. So when we think about corn, and we've had very good corn exports there, and yes, we're running much closer to some of the previous record years. But I also just wonder if based on how these spreads are trading and what's going on in that market, if the crop isn't quite as big as what the USDA says it is right now. And I think there's a component of the export business, but also with the spreads trading where they are, I feel like maybe we're not at the yield the USDA says. And then the problem is that if you take just a bushel off, which really isn't that much, I mean, when you're talking a crop of this size, right, 184, 185, 183, whatever it is, a bushel isn't a lot, but when you talk about the balance sheet and what it does to the balance sheet, there's some impacts there. So whether this export business continues at this pace, I tend to think it doesn't as we get into the new year. And I think the strong export pace is keeping the future strong right now. I think it's keeping the spread strong. I just don't know if it's going to be there as we get into the new year, but we'll see.
December 1st notice day is a week from today, and Thanksgiving is next Thursday, which means that anybody holding December corn basis contracts, they're going to have to price or roll those by close of business Wednesday next week at the very latest, and a lot of them will be before that. Yet we haven't really seen much pressure on the corn market, and the spreads continue to act really well. What do you make of that?
It's like the exact opposite of last year, Joe. I mean, last year these spreads were widening out. We had December to March, the day before going into delivery, we had a 27-cent carry. I didn't see exactly where D's to March is now, but it's tighter than 10 cents, I believe. And so what does that mean for the producer that has a basis contract that they know they're going to roll? This is a beneficial move in the spread for you because rolling at less than 10 cents, because what that does is that reduces your basis by that much. So if you have a 10 under basis locked in, and then you go from D's to March at, let's say, 9 under, now you've got a 19 under March. But think about last year where that would have changed if you locked that in at 27 cents D's to March and you were already 10 under D's. Now you're 37 under the March. So this is a much more beneficial environment to roll those basis contracts if that's what you're going to be doing. I wonder too, part of this is you have a ton of options below the market in December. 420s, 415s, 410s, 405s, $4, $3.90, $3.80. You're going to have a couple 100,000 options expire today. And once those options are gone and we get past delivery, I feel like there's going to be a lot of these bushels that are still out there that are not going to have a floor on them anymore. And I'm worried about the market going back down after that period. And there's a reason why there's an adage in the marketplace that is, bulls have Thanksgiving and bears have Christmas and vice versa, because a lot of times there's a turn in the market right around this, the option expiration first notice day for corn.
Let's jump to the drought monitor.
So a large swath of the Corn Belt received rainfall last week. As a result, much of the area saw drought conditions improve. We did see slight deterioration in southwest Michigan. Drought conditions have improved significantly throughout the region since the beginning of the month. Roughly 50% of the region is experiencing some degree of drought, an improvement from the 74% recorded at the end of October. The High Plains also received widespread rainfall last week. Drought conditions improved in Oklahoma all the way up to South Dakota. When we look at the percentage of U.S. areas experiencing drought, corn country 59%, soybeans 53%, winter wheat 40%, spring wheat 42%, and cattle country 42%.
I didn't look at the stats, but that winter wheat number has had to have come down quite a bit here as of late. Bloomberg printed this yesterday, which I didn't quite understand. Flash drought gripping U.S. threatens to raise food prices in 2025, when actually we've seen like a lot of drought relief as of late. Just over the last week in the Southern Plains and HRW wheat country, they caught a lot of rain, and the rains actually date back further than that. The Midwest has done better. The river's back to normal. It seems like we're moving in the right direction, at least.
We are currently moving in the right direction, although I will say we had Eric Snodgrass on our fundamental meeting that we do, and we have him on every once in a while just to give us a weather update. And there's a couple of things he was looking at. Number one was the fact that we do have a pretty large amount of our growing regions in a drought status right now. He's looking at the onset of La Nina and the timing of that, and then looking at the Pacific Decadal Oscillation. And without getting too excited, he did say that for this time of year, this is the most concerned he's been about a potential for drought in the upcoming growing season as he's been in the last decade or so. So it's definitely on his radar as far as, the potential setup for 2025. It'll be a really good time come February for him to kind of get a sense of how things have evolved from now until then over the last 3 months up to that point, and what that might look like for the growing season. But he's concerned right now, and that makes me concerned.
I've heard that from other forecasters as well. Fact of the matter is that the markets don't have an interest in long-term forecasts. My experience would be that markets trade nothing out further than 10 days, maybe 2 weeks during the heart of the growing season, but that's about it. There's a little bit of rain in the forecast for like parts of the southeast, but mostly dry for the Corn Belt over the next week.
Argentina's soybean planting is progressing at a rapid pace. According to the Buenos Aires Grain Exchange, nearly 36% of the expected 46 million soybean acres have been planted. In the past week, planting advanced by 16%. Adequate surface moisture has contributed to the quick planting pace. Early planted soybeans are exhibiting excellent plant growth. The exchange also reported that 39.4% of the expected 15.6 million corn acres have been planted. Argentine farmers have harvested 29.3% of this season's wheat crop.
Forecast in Argentina is wet. They've got rain coming, which is good, whether it's during planting or during the growing season in either case. And also Brazil looks to be in very good shape. So this could be a time of year, Brian, that's associated with South American weather volatility. And there's just been nothing to be volatile about.
No, the volatility thus far was pre-planting, which is very early. When you think about last year's soybean production out of Brazil, we had a major problem in Mato Grosso. That's where the drought was. That is why we had a crop out of Brazil that was that 150, maybe 153 million tons. It's still up for debate when you're talking USDA versus some of the South American agencies. But Mato Grosso is off to a really good start this year. And it looks like we have the potential to grow that 170 million ton crop, maybe bigger if the rain continues to stay and the weather's beneficial. And so that would be nearly 20 million tons additional production year over year. And with China using roughly 9 million tons a month, right, that's a little bit more than 2 months worth of production that we're going to get just out of Brazil alone. And that will affect the timing of Chinese buying as we get into summer to late summer next year. They didn't come into mid-July this year with 20 million tons more out of Brazil. Do they not come in to buy U.S. soybeans until September next year? So that's going to be the potential issue.
Brazil and Argentina are projected to account for combined 52% of global soybean production. I've heard some people talk about a Brazilian soybean crop in the mid 170s, even as high as 180 being tossed around. Very early for that, but if these rains continue in the way that they've been falling, you can't say it's impossible. And then you go back to this chart, the stocks to use ratio. That's how you get to this 33% stocks to use ratio globally or larger, is that you just have these big crops in South America. So if you're a bull in the soybean market, you'd like to see some sort of South American weather threat just for a couple weeks at least, and we just don't have one.
USDA reported multiple flash sales on Thursday. U.S. exporters sold 7 million bushels of soybeans to China and 5 million bushels of soybeans to unknown destinations for delivery during the current marketing year. U.S. exporters also sold 133,000 metric tons of soybean cake and meal to the Philippines for delivery during the current marketing year.
China is still buying soybeans in what I would call minimal or like routine amounts. I mean, these aren't huge sales. Brian, I keep getting questions about the massive book of corn sales to unknown destinations, and everybody keeps telling me that it's not China. It's not China. It's not China. Is it China?
I keep hearing it's not China. I think some of it's Europe by way of Switzerland is what I've heard, but I don't know if that's right or not.
Yeah, the secret Swiss corn account.
Correct. Yeah, I mean, some
untraceable.
But I don't know. And just the fact that we can get unknown on these reports is kind of silly to me. Like, why can't we say where it's going? But I don't know. I don't concern myself very much with, is it China or is it not China? That's just not that's not a question I ask myself very often.
The market would tell you it's China if it was. What did cattle do yesterday?
Cattle futures were mixed. Live cattle were 70 cents lower to 5 cents higher. Feeders were 32 cents to $1.12 higher. We do have a cattle on feed report coming out this afternoon at 2 o'clock. Cattle on feed as of November 1st are estimated at 99.9% of year-ago levels. Placements in October are expected to come in at 103.3% compared to last year, and marketings are projected at 105.1% versus year-ago levels.
Brian, I believe the live cattle market kind of failed-ish at a key level of resistance this week. Is that your take?
Yeah, so far, but
too early to call it a failure.
Yeah, I mean, I wouldn't call it fair, and I think there's some very good things going on in the deferred live cattle contract. So there's kind of a different story when you're looking at December and February, for example, versus maybe as you get into June, August, October, December. Those charts look a lot different. They look a lot more friendly.
Outside markets on Friday, guys. U.S. dollar is higher. Stocks are a little bit lower. Bonds are up. Gold's up $27. Crude oil is down 40 cents. And the January WTI at 69.70. Have a great weekend, everybody. We'll be back Monday.